If you ever ask yourself, why did I enter a trade too early, why did I move my original stop loss, or why did I even chase a trade after the move, then this video is gonna be exactly what you need. I used to think that I'm not a good trader and that my emotions are not even in control, but the truth is I'm actually a good trader, and probably all of you watching this right now are actually good traders, but you just don't know how to enter the market. So when I reviewed more than thousands of trades, I finally realized that the problem was only in entry model. So when I finally found one entry model that actually works, it changed my life completely and it made me from unprofitable to profitable day trader. So I'm gonna break it down exactly for you in this video. So problems that you are facing right now are probably hesitation when entering a trade, even when you know the direction, because usually you're gonna lose, or even worse, you're gonna miss a move and then enter way too late and lose. And then maybe you're even gonna blame impatience or your emotions because you think that you made some sort of a bad decision, but the truth is you just didn't have the right entry model. So to put this into perspective, let's say for example we are gonna have this price action over here, and you can see even from like 10 meters away from screen that this is, let's say, bullish buzz over here and bullish direction, because market is consistently breaking highs to the upside. You can see break of structure here, and you are expecting new highs, and that market is gonna break the structure and continue to the upside. And you know we're gonna have two problems right here. So the first problem is gonna be people traders who don't have actually the right entry model, and second thing is gonna be traders who don't know how the market moves. So you know every single time when the market wants to move to the upside, or let's say to the downside, we first need to see manipulation. So you can see over here we have higher high, higher low, and higher high. But you can see when market first made this move to the upside and then retraced, you can see that we left this low over here inside of this bullish fair value gap. And what market did? Market swept this low, and after we swept this low, we continue to displace to the upside. And the problems that I see that 99% of traders fail is because they don't know what is liquidity. And that is exactly liquidity. Liquidity was resting here, liquidity is resting here, and liquidity is resting here. So if you put your stop loss underneath this low, underneath this low, or maybe even here, or maybe even here, it really doesn't matter, because you always need to wait for that liquidity sweep. So as you can see, if you enter the market from here or here or here, you're gonna lose, because the market is first gonna collect this liquidity over here. And as you can see, we never displace. This is strong displacement, this candle over here, but this is not strong displacement. This is just weak, or let's say manipulation, like it happened here. The same thing happened over here. And now most of the traders who were bullish, they knew the direction, they entered the market here, they lost. And right now, even worse, many traders are gonna feel FOMO. They're gonna be like, oh my god, market is dropping without me, let me enter a short, and they are gonna enter here. And that is the worst thing that they can do, because all of a sudden, like I told you guys, market swept liquidity, which means the only liquidity that is resting in the market is this liquidity over here and this liquidity over here. And as you can see, market started to move to the upside. So even if you know the direction, even if you knew that we are bullish, still you missed your trade, or even worse, you lost. So right now I'm gonna teach you exactly how I enter the market immediately after this liquidity sweep, targeting the opposite liquidity, and literally this model has around 80 to 90% win rate. So we're gonna use only one entry model and only one concept, and we are gonna remove any emotions. So this is gonna be rules based. And as you can see over here, this is fair value gap, very well known concept, and I think that all of you watching this right now actually know what is fair value gap. But the thing is, we are not gonna use fair value gap like 99% of traders, because 99% of traders lose in the market, which means, let's say in this example over here, if you placed your stop loss here waiting for fair value gap to be retested, you lost. If you placed your trade, let's say after the sweep of liquidity on this fair value gap, and you expect that this high is going to be taken, you missed the trade. So we are going to use this completely differently. So how are we going to use fair value gaps is very simple, because we are not going to wait for anything. We are going to let the market confirm to us that we are bullish or bearish. So as you can see over here, after the sweep of liquidity, we are always gonna wait for the inversion of the fair value gap, and then we are gonna immediately enter the market targeting the opposite liquidity. So as you can see over here, in this example over here, this fair value gap never got disrespected or inversed, because you can see that we wicked underneath here, we wicked underneath here, and we wicked underneath here. But this fair value gap over here, this is complete different story, because you can see that the market disrespected this fair value gap with a huge bullish candle inversing the gap. And over here, after this candle, market is telling you that we are bullish, and market is confirming to you that we are gonna target this opposite liquidity. So if you ask me, in my opinion, this is the best entry model on the whole entire YouTube trading scene, and you just can't prove me wrong, because I have around 80 to 90% win rate, which is amazing. So before we go into the live examples, every single strategy has some sort of positive side and negative side. So first I'm gonna talk about positive. Like I told you, high win rate around 70, 80 to 90%. It really depends on the month. And the thing is that is good about this model is that it moves actually really fast, because every single time when you see inversion, you just enter the market without any hesitation, without any guesswork. You just enter the market, that's it. And also the good thing, actually the very good thing, is that you don't need any daily buzz, any indicators or whatsoever, because you are just waiting for that liquidity sweep, strong momentum, and then you enter the market. Very simple. Now the negative side of this entry model is gonna be that fair value gaps present all the time, literally 24/7 in the market. But you don't need to worry, because I'm gonna teach you the exact timing. So when are you gonna enter the market, where are you gonna enter the market, and how to enter only the best fair value gaps, so you can avoid all those bad ones and enter only on the good ones. Second thing is gonna be hard to spot liquidity key levels, but you also don't need to worry, because in live example I'm gonna show you exactly how to find it. Which means third negative thing is there is nothing, like literally there is not a single thing that is negative about this entry model. And like I told you, it changed my life, so I really hope that it can change yours if you stick until the end of this video, take notes and watch the live examples. So right now I really hope that you understand how good this entry model is, but we're gonna put it on test and see how it actually performs in the live market. So let's get started. So the first thing that you need to understand is that we are always gonna trade from 9:30 until 11 o'clock, because that's where the most volume kicks in, and that is when New York Stock Exchange is open, so only about 2 trading hours per day. So the first thing that you are always gonna do when you come to the chart is you're gonna avoid all this noise. We don't care about this, because the only thing that we care about is that we are just gonna mark, let's say, key liquidity levels, like I told you, which is this high over here, and maybe we have this indicator. You can see that we have London lows and Asia lows underneath resting over here, which are very good and actually key liquidity levels. So we're gonna mark all of them. Right now, what are we gonna do? We're gonna wait for 9:30, and as you can see, 9:30 over here is gonna be on this candle, and here we go, bang. Usually what 9:30 candle is gonna do, it's gonna manipulate the price. So right now we're gonna scale onto the lower time frame and search for our entries. And let me just show you why this entry model is the best. Even if you have a lot of experience and you just know that we are first gonna take out this high, because as you can see we are bullish, and also market is respecting all the bullish fair value gaps. Like I told you, we have this bullish gap over here, market never inversed, and we respected that gap. So you can go on the lower time frame and actually catch a move targeting the liquidity, not only reacting off of liquidity, but actually targeting that liquidity level. So you're just waiting, and here you go, you have this huge displacement candle to the upside. And let's say you enter a market here on this candle over here, and you put your stop loss like this, and you are targeting this key liquidity level, and you can see it's gonna get hit. Because usually when traders know where is drawn liquidity, they are still gonna wait for let's say this bullish fair value gap, or let's say this bullish fair value gap. They're gonna wait for some sort of retracement, but the thing is that's actually never gonna happen. Okay, so the thing is, even if you miss this move, that's completely okay, because we still didn't have the sweep at that time, so you don't need to worry. But the problem that's gonna lead us to that is that usually 99% of people are gonna see this as a break of structure and a huge displacement to the upside, because they just saw this move to the upside and all these bullish parallel gaps. And now what are they gonna do? They're gonna place a trade like this, stop loss underneath, and they're gonna just try to continue with the trend. But the thing that they are missing is that we actually just swapped the liquidity over here, and if we zoom out, you can see that we have this huge bearish parallel gap. And don't you think that market is actually gonna respect, oh my god, this is a little bit too far, but don't you think that market is actually gonna respect this parallel gap? Because market is doing that all the time. One time respect, second, third, fourth, fifth, and as you can see, market is consistently respecting this huge bearish parallel gap, which is completely fine. But they are just missing that final piece of a puzzle, and the thing is, we have this fair value gap over here, and this is on 5 minutes, which means this is lower time frame, so we can scale even lower. Let's say 3 minutes over here, or let's say even 2 minutes over here to catch even better trade. So right now I'm just gonna play the price and wait for that inversion of the fair value gap. Okay, so still we don't have any inversions, because you can see that market is respecting this gap, so we're just gonna wait. And imagine all the traders who play their trade like this, and they are right now, oh my god, I'm tapped in, this is gonna reach my take profit. But the thing is, it's not gonna do that, because market is just inversing these gaps and disrespecting all these gaps. And right now, when market inverts all of these gaps, we are gonna enter trade. We're gonna put our stop loss, let's say here, because this is one fair value gap and this is the second, so we can combine them, and we're gonna place our stop loss above those gaps. And like I told you, we are gonna target all these lows, because these are the session lows for beautiful 1 to 2 risk to reward. And if I play the price, you can see how to play it out perfectly towards the take profit over here. And the thing is, you also can see that we never swapped liquidity over here, but we actually inversed, we displaced through this low over here. So this over here was kind of a reversal example, but I can also show you the continuation model. So the first example was over here after the sweep of liquidity, and that was, like I said, a reversal move. But right now we're just gonna continue with the trend, because you can see that market is consistently making higher highs, higher lows, higher highs, higher lows, and higher highs. So we're gonna catch a bullish trade trying to target the next liquidity. So what are we gonna do? We're just gonna scale on the lower time frame, let's say 50 minutes, and you can see that we have a bunch of bullish fair value gaps and a bunch of sell side liquidity resting and a bunch of buy side liquidity resting. So whatever happens first, we're gonna just take advantage of it. So you can see that market first swapped this liquidity, which is sell side, manipulated underneath all these lows over here, and here we go, 930 is over here. So let's just see how it's looking on the 1 hour. We are respecting this huge bullish fair value gap, and we are disrespecting this bearish fair value gap, as you can see. So pretty much our only job right now on the lower time frame is to mark out all the fair value gaps, bearish fair value gaps, if we want to catch move to the upside, and wait for them to be inversed. And boom, here we go. This was at 930, and since it is exactly when the market is opening, I just want to have a little bit of a wider stop loss because of the all of manipulations, and we can target for the first take profit, let's say this high, and then for the last take profit, all these highs to the upside. So if I play the price, you can see, yeah, it got hit over here. Like I said, this was our first take profit, as I told you guys, because these are the relative equal highs, and usually market is gonna make some sort of retracement, so you need to make sure to partial some profits and then leave the rest of position running towards the final take profit if you want. And then maybe even if you missed, guys, this move over here, like I told you, market is usually gonna retrace, and it's still not 11 o'clock, so we are just gonna go to the lower time frame right now and search for another entry model. So you can see there is not a single bearish fair value gap inside of this move. Actually, here we have one, but this one failed, and I didn't even want to take this one because we just swapped the buy side liquidity, which means target is already taken and we need to wait for retracement. So the only fair value gap that we have right now is this on the 2 minutes, 3, and probably I would say 1 minute. So we're just gonna wait for the first inversion, so either it happens on the 1, 2 or 3 minutes, because I'm very bullish biased. And here we go, on the 1 minute we have this inversion, and let's say I'm gonna enter the market here, stop loss, like we can put it like this, and we can target, I don't know, some sort, since this is like, guys, since like this is very protected high because it just swept the liquidity, we can target some sort of, I don't know, let's say 1 to 2 risk to reward, something like this, some of these relative equal highs, and then we can go break even and target the last high, which is this high over here. So you can see how it played out, and yeah, you probably, yeah, so if you targeted this high, it also got hit, but if you targeted this high, that's more than enough, like 1.6 risk to reward here, and here we have 1.5 risk to reward, which is like 3% in just one session. And you can see after all the targets were hit, we are not gonna take any more trades. And also, guys, by the way, this fair value gap played out. If you took these shorts over here, that's okay, but me personally, I wouldn't take this one, because you can see that we never actually swept any meaningful liquidity. So if you want to increase your win rate, you always need to wait for meaningful liquidity levels. So that's gonna be pretty much it. You can see how simple it actually is. You are waiting for the liquidity sweeps, manipulations to the one side, and then inversions trying to target the opposite side, and that's it. And that's gonna be it for this video. I have only one thing left to say, and that is that you have my free community, free Discord, all the free PDFs that can help you to trade this model inside of my free Discord. You can check all the links down there below. It's completely free, and that's gonna be it. Smash that subscribe, and I'm gonna see you in the next one. Peace.